Welcome to the Closing Beat, everybody. Happy Wednesday. How you doing? I know it's Wednesday because I got my little cheat sheet in front of me. I always put the day. Notice how I haven't got the day wrong in a while? Huh? It's kind of quality and respectfulness that I provide to you guys here. This is the Closing Beat, a quick stock market update show that we do. We go over all kinds of different things. Try to leave the opinion out of it and just go right for the stats and all the details so that you know what's going on. You can make your decisions as to the investments that you like. As far as investing, we do investing here for our clients. Jazz Wealth Managers is the website. We manage our own funds. You can see them on our website, of course. We're the financial advisor for people no matter who you are, right? You don't have to have $1 million to come join us. We try to help with everybody, and we try to teach as well. This show is sort of a marketing pitch. I think you guys get that, to try to show the type of things that we like to teach and how we like to keep engaged with our customers rather than just send them a Christmas card. Let's get right into it today. Oh, but our class tomorrow, I teased you. Our class tomorrow for our customers is going to be on how often the stock market falls as far as it does, bounces as sharp as it does, and then makes a new low. So we're going to look at every single time in history the markets fell 20, 30% and then bounced for half of that, meaning they recovered about half of it. How often did it recover that much and then turn around and make new lows, just to see if there's anything we can gain from prior history there. Our jazz artist of the week is Art Blakey, famous drummer from back in the day there. I'm just going to recommend a whole album. It's called Free For All. If you want to check it out, it's a whole album. It's like an hour long. Just enjoy yourself. Have a good glass of wine tonight. You're welcome. All right. Also, Friday, there'll be no closing beat. We'll do all the normal shows as we do, but Friday, there will be no closing beat. Just a heads up on that one there. Let's talk about the stock market here. We got 456 to the upside on the Dow. You got 62 points on the S&P, and the NASDAQ gaining 232 points on the day. S&P 500 continues to be in the chop zone. It's kind of boring to say that every single day, but it is. This is the chop zone. We mentioned this early last week to let you know that that's what was going to happen. That is what's happening. I never like to be a guy that says, I told you so. I always want to be able to tell you ahead of time. That helps a whole lot more when it comes to the stock market rather than telling you after the fact. That really bugs me. It's probably one of my pet peeves. That and chewing, I can't do it. Like, you're going to eat some candy in front of me, we have to be in different rooms. So I'm going to quarantine myself. Anyways, you got the NASDAQ strongest today. The NASDAQ gaining 2.3% on the day. It is now less than 1% from being positive again year to date. The weakest of the day was the Russell 2000. That's a common theme we've been seeing here for that major index there. Added about 1% on the day. It's down 27% year to date. Still got a long way to go. And if you're curious, the S&P is down about 13% on the year. So not bad. We've certainly seen worse here in the immediate short term. So you've got that going on there. As far as the S&P, okay, I'm just going to throw it out there. This is going to be a little more detailed of a class. I'm going to cover USO in great detail, not only the headlines that you're seeing, but what's actually happening, and not from an opinion standpoint, specifically the data coming from the company themselves or the fund themselves. But I want to point out something here real quick. For the S&P 500, I've been sort of highlighting this in the Outside of the Virus and some of the other shows, that there's a couple names that lead the way. In fact, there are 5 names that make up over 20% now of the S&P 500. So 20% of the daily performance of the S&P 500 actually comes from these 5 stocks. Apple, Amazon, Facebook, Google, and Microsoft would be the other one there. And so they're just that big of a share of the market cap weighted index. So I wanted to highlight that. But more importantly, I wanted to make it a little extra geeky for you guys today. So I don't have the glasses actually, but let's get really geeky about this. Today was a good day in the stock market. So I wanted to break down all 500 stocks in the S&P. It's actually 505. I wanted to break them all down and show you just for today which stocks had the greatest impact on the stock market's performance just for today. You ready? Here we go. So here's the slide here. This is today's contribution of each individual stock to the gains in the S&P 500. What you're looking at is on the y-axis, you're seeing the performance of the stock for the day. So for example, you've got PayPal, right? PayPal right in here somewhere. There you go. PayPal, what, about 7% gain or something on the day. And then as you work your way right on the x-axis, that's how much impact it had on the overall performance, meaning with the contribution that it itself provided to today's gains. As you work yourself to the right, you can see the bulk of stocks here have very little or normal impact on the performance of the market, which is good that most of them were positive today. So you got the bulk of those bubbles above the zero line there. There are only a few names to the downside in terms of, being 500 stocks. But look at how you go over to the right. Microsoft today had over a 7% contribution to today's gain. Apple in the mix, Amazon in the mix. And in fact, it doesn't matter what day you look at, it's always going to be this way. This is just today by itself. So, as we mentioned a minute ago, Alphabet, Facebook, Amazon, Apple, Microsoft, the top 5 in the mix there, providing the biggest contribution in terms of weighting to the performance of the markets here today. Just thought that was interesting. And another way to look at this is if you look at the bottom there, you see Limited Brands. So Limited Brands had a horrible day. It was down like 23, 24%. But even though the stock price was down, had very little impact on the performance of the market today. If Microsoft, Apple, or Amazon were all the way down here, you could very quickly see how you have a stock market that's going to have a hard time moving higher for the day. So just wanted to point that out for you there as well. Wednesday, it is Wednesday. We got a very, very positive day for the stock market. So far, the stats are holding up. I shared these with you yesterday. This is, for the entire year so far, the percent probability that or historical probability of the individual day of the week being positive. Today is Wednesday, 57.14% of the time Wednesday is positive, and after we add in today's data, that gets a little bit of a boost today. Thursday is the best performing day of the week so far this year, in case you're interested. However, Tuesday remains the only day that averages a positive gain. Today will go a long way towards helping Wednesday recover. Maybe we can update this for next week there, if we can maybe check in with how those things are going. Anyways, that's a little bit of initial warm-up geeky data just to get you started. I'm going to talk about USO in a second. On our FinTips video today, we did, on our YouTube channel, 1 o'clock today it came out, we did a list of dependable dividend stocks. We broke them down in a different way than we normally do. We're trying to change up the concept a little bit here, content that we put out. So we covered that. On Outside the Virus, we covered a really interesting stat, how Morgan Stanley uses nitrogen dioxide to actually suggest to their clients to buy Apple. Huh? How's that for a teaser? Check out the Outside the Virus here today if you want to look more into that. I thought that was pretty cool. Also, we talked about shelf offerings. So if you're one of those market geeks, you like to know how everything works, or maybe you're thinking about going public, you might want to learn what shelf offerings are. Atlas Worldwide and Constellation Brands did mixed shelf offerings today, and I went through the definition of that. Also, last night on the Couch Talk there with Jazz, boy, we did a lot of stuff in the last couple of days. We talked about how to pick a stock in the banking sector, or at least how to think about that in this coronavirus type environment. Okay, let's go over to the sectors here for the day. I'm just going to dive right in. Let's make this happen here. Completely opposite from yesterday. If you look at the overall sector performance, every sector was red yesterday. Today, every sector was green by at least 1% or more. Before I get there, let's do the month-to-date breakdown. So we're going to take a look at the breakdown of the individual sectors for this month so far. Got a post. We were going to post this at some point. I think it's coming up. What is the likelihood that if you asked 100 people what the best performing sector is for this month, what's the likelihood that you think any one of them would say energy? Well, in fact, energy is the best performing sector of the month as of about noon today. So this is data from about noon. Here is how each sector is performing. Financials continue to lag behind overall, but healthcare stays very much close to the lead. That's the best performing sector so far this year, and it's had a lot of really great days. It's extended in the short term, but that's to give you an idea of how everything is going there, and a little bit of data to share with you there. All right, we're going to go over to the price of oil today. Let's take a look. There's a lot of questions on oil, and so I want to highlight this and maybe go a little bit deeper than we normally do. Kind of data and research you can expect here from old Jazz Wealth. That's called tooting your own horn. All right, price of oil up by 23% on the day. Settled down a little bit today. It actually went back to $13.8 a barrel. $13.80 a barrel in the regular session is where it closed, despite what you're seeing on the screen there. Now, a lot of people are looking at USO and you're going, hey, looks like a discount to me. That's an ETF. I think I want to participate. Probably 200 to 300 questions on this one from everybody out there. I can't answer all of them, obviously, but here's what's going on. In the headlines, you are seeing, hey, they're going to do a reverse split, 8-for-1 reverse split. That's very common. This ETF does do that a lot. This is nothing new. It's not an emergency action or any type of thing like that. They're doing an 8-for-1 split. If you own the stock, basically it means you are going to have 1/8 the amount of shares that you had before, and you're going to see the stock price rise 8 times from that, what it is currently, or on the day that they do the split. I don't know if it's tomorrow, but they're doing a reverse split. It doesn't affect anything. It doesn't affect your buying power, your margin. It doesn't do anything. The same notional value that you currently own, however much money you have, is however much money you will have in the stock when they do the reverse split. Just know that it's coming. Beneath the headlines, this is what's really going on with USO, and you got to be careful here because this can actually go negative. It's the only ETF that I know of well, that it has not gone negative, but could technically go negative given that what its holdings are. On Monday, I reported to you that you noticed that the USO did not go negative as the price of oil did, and it's kind of unfair because they were reporting May's contract. It was the expiration for May's contract. This ETF does not allow themselves to go up to expiration with that contract. So on Monday, they actually had 80% in the June contract and 20% in the July contract. They were not participating in the negative movement of the May's decline there. You won't find that anywhere else on YouTube there. That's the good stuff here. And let's continue with that because I want to give you some more stuff. They decided last night, had a meeting, they decided what they were going to do was do something outside of their normal operations. Instead, what they were going to do now, given the price of oil, they were going to take and leave only 40% of the money in the June contract. They were going to put 55% in the July contract and then even go 5% to the August contract. There's a little problem with that, though. It's something called contango, and I touched on this on Monday. In contango, what you have is each month the futures contracts expire. You have to then either choose to let it expire, take your profit or loss and move on, or let it expire and take delivery. Your brokerage firm won't allow that. But anyways, or you can roll it forward and get yourself more time. Now, over the past few years, if you decided to roll forward, the value of the forward contract, the next month's contract, was higher than that of what you were currently in. So if you wanted, say it was $20 and $30, that's not what it was, but let's say $20 and $30. So if you were in something that was worth $20 and you wanted to keep the same investment but move it out 1 month, you had to pay a $10 difference per contract just to move out, which is not $10, it's $1,000. So it's misleading. But anyways, you had to move it out. So what USO did is they said, we're going to move some of our contracts to July, we're going to move some of our contracts to August to spread out a little bit. That costs you a lot of money. And the way that they're reimbursed for that is they actually take it out of the price of the ETF. So tomorrow, even though the price could go up, you're going to see the value of, oh, you saw it today. The value of USO is actually lower than oil. How can that be that the price of something that holds futures contracts that were higher today was lower? And that's because of the forward roll, because they took their sort of emergency action to do that. Also, one more step further. You got to be careful if you're looking at USO because this is currently trading at, well, as of now, it's still about 30% actually. It's trading about 30% more than it's actually worth. Not the price of the stock, the premium that you're paying to participate in this ETF. Here's how this works. I'm going to share this with you and try to give you a visual because we all like visuals. I'm a visual guy. The premium for buying this is 30% now, 30% higher than the value of all the assets. So if we know that the USO holds futures contracts, and we can very easily just go look, I share them every day, the futures contract with you. If we can look at the value of the futures contract, do a little math, we can figure out what the actual net asset value of the USO is. It is 30% higher than it actually should be. Why is that? How is that even possible? If you bought it today, you bought something 30% higher than you had to, even though the price went lower. It's a unique sort of thing here. I want to try to hopefully simplify this. What's happened is they had more money than ever yesterday want to buy the USO. However, they only have so many shares. Every day they can issue more shares. I don't think they do it every day, to be honest. I think they've got a longer time period. But they can issue as many shares as they want. A lot of people don't know that about ETFs. There's actually no fixed share amount. They'll just issue more shares if more people want to buy them. They'll just keep going indefinitely. They can have technically unlimited amount of shares. So the USO was like, wait a minute, we've got more money coming in. We need to issue more shares. That takes a little bit of time. So because it takes time, they said, we just can't do this. We can't fulfill this obligation. So we're going to close the fund off, and we're not going to issue more shares right now because we got to get them approved by the SEC. It's a whole thing. That's a whole separate topic. Anyways, so because all this money came in, but they didn't have any extra shares, that money was coming in at a premium relative to its actual value, not its theoretical value, but its actual value. So what happens there is if you decided to buy it, you paid anywhere from 30 to 35% higher. The easiest way that I can explain this is if you have a car that you want to sell and you know it's worth $20,000. The actual market has determined that the value of your car is about $20,000, let's just say. And now when you go to sell your car, you expect someone to come talk you down. Maybe you take 19 or whatever, depends on how bad you want to sell it. But imagine now you have one car for sale and 300 people came to buy your car. Someone's going to say, all right, $20,001. Someone else is going to say $21,000. Now it's $22,000. Now it's $30,000, $40,000, $50,000. Because there's so many people that want to buy that car, chances are someone's going to want to pay more. More people are likely going to pay more than the actual value of the car, and that's what's happening in the price of USO right now. So you've got a double whammy there. Number one, the cost to roll to the future contracts is inflated. It's in contango, which means you're paying more to roll out, and they did just roll a sizable portion of their position out in time. That cost gets passed on to you, which you saw the price of USO fall today. That's the cost passed on to you. So that's maybe not fair. And the second thing is that the premium in the USO is so high right now until they can issue these extra shares that you're paying that premium, meaning the actual value of the USO is somewhere under $2. But you paid, or anybody, if you bought it today or wanted to buy it, you would be paying more than the actual value of the product. Nobody in the stock market wants to pay more than the actual value of the product. Was that too much? So sometimes if you're one of our customers and you go in the dojo, we rank the classes by skill level. So you've got basic classes, support type classes, and geeky classes. This is one of those that would fall under the geeky classes category. I hope I didn't go too far. Not saying you guys are dumb, but this is something that you will not see anybody else talk about, not even on TV, but that's what's actually happening with the USO. It's not my opinion. That is their information, their data. Let's move on before the eyes close. We've got technology stock, tech up about 4% on the day. This was your leader, back above the 200-day moving average. As you can see, still down about 4.5% on the day. It is the second best performing sector-based ETF on the year. Why is that? Because XLV, healthcare, is the best performing sector in the market for the year, up 1.5%. It was kind of middle of the road today, but as you can see, it's a little bit extended, so it's just kind of hunkering down in this area here, staying quiet for a little bit till it can attract more buyers. Industrials, about 1% gain on the day. This was your laggard. Now, I mean, it was still positive, but it was your lower performing sector for the day. Some of the stocks inside of there that stick out, you had UPS down about 3%, back down to the 50-day moving average there. You had General Electric, which has been super, super weak, by the way. This stock has underperformed the entire bounce in the stock market. It's very easy to see. Stock market bounced. General Electric has not bounced. That's got new lows written all over it. Not a suggestion, just that's the way it's looking. And Caterpillar was held back a little bit. 1 point today was negative. Finished the day up just a little bit. Let's go to consumer staples. Consumer staples up 1% on the day. So the other weak one here, not bad, just lagged behind a little bit. Tyson was one of the reasons for that. Tyson Foods down about 3% on the day. They shut their Waterloo, Iowa plant. I'm very familiar with that area. Got family up in that area. They shut down that pork plant, and they've got other plants working at a reduced production. That really just kind of hit all the news today and got a little bit of the attention there, so the stock was down. Also an underperformer. Gold up, it's pretty nice today. It was a good day, up 3%. $1,738 a barrel, $1,738 an ounce. So you got $3,000 in the next 18 months. That's what Bank of America thinks. That'd be just shy of 80% gain in the next 18 months that Bank of America thinks is going to pop out there. All right, individual stocks. You got 4 new highs today. That one of them is going to be Newmont. That's in the gold mining sector. It's one of the bigger holdings inside of the GDX. It is the largest holding in the GDX, by the way. Johnson & Johnson hit new highs today, and a couple others. New lows. We mentioned this yesterday. Southwest Airlines looking like it was going to hit new lows. Today it did hit new lows. It finally broke. It got $1.6 billion from the Treasury today. That's not all that it's getting, but as of last night, they have officially gotten $1.62 billion. Can you imagine that transfer? Like they just, where is this at? What bank account do they have? They just woke up and they're like, oh, hey, the Treasury sent us $1.2 billion. We get, what we get, $1,200 each and all that stuff. They got $1.62 billion. Could you imagine waking up to that? I saw that, by the way, where somebody got their Treasury payment and it was like $20 million or something. It was obviously a mistake, but that's that one there. Let's go into a few stocks affected by the virus and in the news because of the virus. Remember our other show we do outside the virus, which I mentioned a minute ago. This is stuff that has to do with the virus. Allegiant is another airline, got $171.9 million. If you're not familiar with Allegiant, it's an airline, regional, very regional airline there. United Airlines updated a bunch of information in terms of how they're being affected by the virus, production and everything. They're also going to be raising, I think they did it already, to be honest, $1 billion by issuing more shares. American Eagle, There you go. American Eagle almost hitting new fresh lows here today. They're going to offer, I think they did as well. Everybody's already doing this stuff. $400 million in convertible notes. I believe that was offered today. GameStop sees their sales dropping. This poor company, they need help. GameStop still put a little profit up on the day today, 2.3%. Sees their sales fall 23%. They didn't need sales to fall even 0.5%. That's a tough one. The two stocks doing the mixed shelf offerings today, Atlas Worldwide and Constellation Brands. That's the symbol there. That's alcohol-related products there. And Expedia getting $1 billion from a couple different private equity groups there. They're going to take a seat on the board, giving them $1 billion. They're investing in this company. That's not, that's relevant, right? You want to look at something like that and go, okay, some of the biggest players on the group, Apollo Group is one of the investors in this group here, or in Expedia. That's interesting, right? They chose to invest in this company that's clearly discounted, that's clearly had a rough run. They've done their research. They think this is a good stock to invest in a long term. They took an aggressive position in it in terms of being able to participate in management and everything, but $1 billion they invested, so something to consider there. All right, let's move on. I feel like I spent a little much time for you there on the whole oil thing. You guys will either let me know you love it or give me a lot of grief for talking about that for too long. Stocks reporting their earnings tomorrow. You got Domino's Pizza, Grainger Worldwide, Hershey's, Eli Lilly, Pulte Homes, that'll be interesting, Union Pacific. After hours, you got Alaska Airlines, Capital One, Intel, and Skechers reporting there. I will take a chance here and try to answer some of your questions and catch my breath. Oh yeah, you got Domino's earnings. I think they're going to do well, to be honest. I think Domino's has done well through this whole mix. I see, maybe it's because there's less cars on the road, but I see Domino's everywhere. Their commercials have gone nonstop. They're hiring like crazy. That's an indication there. I think they'll do well. And that's, remember, their quarter's only going to include part of the shutdown there. How GameStop is not bankrupt. I agree. And I don't see how they don't. Every other company, look at Netflix. They figured out, okay, we're not shipping DVDs anymore. They pivoted. They made a change. I don't actually know how GameStop changes things. There's just no need. They don't need to be a streaming service. People maybe trade in games and stuff, but that's all going away. That's a tough one. Yeah, there's just nothing I can think of that keeps them in the loop in any way, unless they became like a gaming center, which isn't profitable. But if they became a place where you actually went and it was decorated games and all the trinkets and everything, and you played games there, and they hosted competitions, but I don't think they have the money to make that change. I don't know. Why are you not receiving the stimulus paycheck? Actually, there is, you can go to the IRS website, you can actually punch in your information, and it will tell you why not, if you're qualified, and if it's on the way, or when they expect to pay it. So I don't know why you in particular aren't getting it, but you can check with the IRS rather quickly. Yeah. Oh, yeah. Airlines with more cash is a better investment. Yeah, I mean, it's certainly a consideration. I think you had the Delta Airlines CEO on TV today saying they feel confident now they've got enough cash to get them through the rest of the year. I hope so. They just got a bunch of money from us. Yeah. Oh, what happened here? Let's start off again. What are your thoughts on the ticker symbol ERI? You want to look at El Dorado? I know the purchase of Caesars is on hold. That's really the last I've seen. There's a lot of downgrades on the stock just at first glance here. They got to get back open, man. Yep. Yeah, they got to get back going there. Oh, yeah. We said that Boeing earnings would post. I don't think Boeing is up just yet. I might have accidentally said it. I could see myself rattling off stuff. I try to be mindful of the things that I say, but like I said on Outside the Virus, at some point I try to give you guys really, really detailed stuff every day to build credibility, because at some point I'm going to say something that you guys, you're going to lose all credibility for me. April 29th, before the market opens, at the moment. They could change that. That's what they filed for. Yep. Sorry if I missed any questions while that's going on there. Stimulus check not for everybody. Yeah, you can look it up. I mean, you might want to check it out. There might be something in there that give you a little hint or something you need to update. You like the dividend video one? If you'll be expanding on the futures, company increasing dividends. Did that. Yeah, did that. Companies that increase their dividends. Do I still have that chart? try to save all this stuff. I don't have it readily available. We did a small list before. I could see expanding on that. I like it. I'm going to do one where we focus on companies that have actually been able to reduce their debt. Let's see what companies are not taking on more debt, because every day I respond and I say, so-and-so's raising money, so-and-so's selling shares, they're taking on more debt, they're issuing more bonds. Let's see if there are any companies that are not doing that and in fact are actually reducing debt during this whole downturn. That might be an interesting one as well. So working on that data. Yep. You got it. What do you think about semiconductor performance? It's a very broad industry, so it's very tough to look. We can use like the SMH, you can use the SOX if you want to look broadly. They've naturally just outperformed a little bit, but it's a very broad one. So I don't know if you're in a category there or you're just thinking as a whole, a little more, if you could expand on that, that would help me dial in a little bit more for you. You think the markets are going to go lower once the markets realize the mess with unemployment? Now, a lot of that's priced in. We don't have a lot of very active data, but a lot of that is priced in already. Tomorrow we'll cover at least the market performance side of things, how often these things happen. It won't be it won't be like a fundamental kind of analysis, it'll be more of a technical analysis to show prior times in history. But it's very interesting how this market has recovered so fast, so far, with really nothing, right? People still sitting at home. Yep. There you go. Lovesac, yep, officially the best performing stock on earnings last week. And it's a cute name, right? It's a cute name. Anyways, I hope the oil talk helped you today. I was trying to sort of answer all the questions in one, but really give you the kind of detail that I try to give, right? If you're watching us for the first time, that's the type of stuff that I try to shoot for every single day. Really just in hopes that you keep us in mind. If you have need the help of a financial advisor or want someone else to manage your long-term investments, many of our customers do their own active investing wherever they do it. I help with that, but we manage their long-term investments just because that's more of our specialty. We're not active investors. We just talk about the market every day to give you an update and really to teach you something new, you know? I want to teach new stuff every day. Anyways, that's pretty good for me. I will wrap it up there. We'll see you tomorrow. We'll be back to do this again. Remember, no closing beat on Friday, but we'll still be doing everything else and our class for customers tomorrow. You enjoy the rest of your day or evening, wherever you're at, and we'll see you then.
Hey, wait! Before you go watch one of our other great videos, have you had a chance to see our new FinTips videos? They focus on one topic at a time, covering investing, personal finance, and anything that can quickly help you with your dough. Best of all, we'll keep it real short, because we know time is money.
Why should you choose Jazz Wealth as your retirement or long-term investing service? Our portfolios are managed by us, not some faceless mutual fund manager. Our private classes will teach you everything about investing and getting your dough straight. Best of all, our fiduciary standard means your best interest comes before ours.